Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market update. Hope everybody had a beautiful weekend. So in today's markets, guys, relatively sideways day. SPY down about 0.09%, QQQ down 0.37%, but we did have some healthy rotation coming in the names of financials. That was actually green on the day. Traders largely waiting for tomorrow's CPI report that comes out before the market open. So in today's video, guys, we're going to go over the CPI forecasts for tomorrow and what they entail. We're also going to cover one company earnings that occurred after the close today. That is going to be Oracle. And for the rest of the week in earnings, guys, not much in terms of tomorrow, but then on Wednesday, we do have a couple interesting ones. Might want to take a look at Dollar Tree, see how consumer discretionary spending is coming. And we also have Lennar Corporation, another one of our home builders reporting, so could take a look at them as well. Thursday is going to be a big day here, guys. Another dollar store in the morning, DG, and then after the close, we do have Adobe and Ulta Beauty. So I'll be taking a look at whichever of these have some outperformance after that earnings report. In today's video, we're also going to cover one subscriber request, this time coming in from Naveed, asking me if I can review some Powell, POWL, and ANF Abercrombie & Fitch. So we will do that directly after the Oracle earnings presentation. We're also obviously going to cover our major technical analysis in terms of our indexes and big tech names, and lastly conclude with my portfolio to see which names have I chosen to trade on this Monday session. So without further ado, guys, let's get right into today's video. Let's take a look at the heat map before getting into some earnings here. So on the heat map, you'll see that Apple and Google having some nice recovery after lagging the rest of big tech for pretty much the past 2 weeks. In the past couple of days, while the rest of big tech has largely been down, Apple and Google with a little bit of outperformance. That being said, Microsoft, NVIDIA, Amazon, and Meta to the downside. Meta getting hit by some Donald Trump comments, as a matter of fact. That we'll take a look on later when we go through Meta stock. But for the large part, guys, fairly broad-based performance on the day. Decent rotation on the bottom half of the markets. When I take a look at a day like this, there's really no red flags as a whole, guys. Now take a look at the one-day relative performance. You'll see that mixed market once again. Energy and consumer defensives leading to the upside, and to the downside, technology, industrials having a bit of a negative day here. So all is going to be about that CPI report that comes out tomorrow. Now let's take a look at what are the numbers forecasting for that CPI report. So here are the headlines, guys. This is our macro news for the week. So you'll see tomorrow we do have CPI before the open. And then on Thursday, we also have our producer inflation data that's going to come in pretty much before the open as well, and some retail sales data. And then on Friday, a bit of consumer confidence news. Keep in mind, guys, CPI going to be the real big one for this week. And then next week, we have Jerome Powell with an interest rate decision next Wednesday on the 20th. So that will be very, very interesting. As you can see, guys, the expectations coming into tomorrow is going to be for CPI year over year of about 3.1%, and your core should be coming in at about 3.7. Now, where does that stand on where we were previously? Well, here's the chart for CPI as a whole, and you'll see that as of the January reading, we are about 3.1%, which is on the lower spectrum of what we've been having over the past 2 years, ever since inflation became a problem. So it would be nice to get 3.1% or lower. That would really be in line or lower than January. That would be a very decent read. Now, in terms of your core number, in terms of this 3.7 versus the 3.9, that is going to be a good one here, guys. And if we take a look at the trend for core, we can see that the lowest read that we've got pretty much since the peak of inflation has been 3.9 as of December. So very curious to see, guys, what is the number that's going to come in tomorrow? Will it be 3.9, 3.7? One thing's for sure, guys, anything lower than your 3.9 previous read here is going to be a very bullish read. So for the most part, expectations are that inflation will be continued to trend to the downside. Although slowly, I do agree, at least it is still coming down. So those are your inflation expectations for tomorrow. Obviously, if they come in more bullish than expected, you can probably see this daily uptrend in your indexes simply continue to the top end of your trend line. And obviously, if it's negative here, guys, well, we'll probably follow up with Friday's sell-off here and potentially set some lower lows and lose some daily uptrends. So tomorrow is a very, very important day in terms of our short-term direction. If it is negative, guys, it could lead into a more broad market sell-off leading into Jerome Powell's statements next week. So keep that in mind, guys. Tomorrow's data, very important for the direction, at least for the next 5 to 7 days of trading. So with all that being said, guys, let's jump into right quick into our earnings, and we're going to cover Oracle, So Oracle coming in after the close here with a very nice earnings beat. As a matter of fact, take a look at your earnings here. Had a nice beat on EPS by about 2.41% in relation to the expectations, and revenue came in largely flat. However, they did deliver extremely good guidance. If you don't know what Oracle does, guys, Oracle is the arguably largest cloud analytics provider in the world at this point, and their business is a very diversified business. So they have a few segments here: business apps. They compete with Salesforce, Google, Microsoft in that division. Cloud services, they compete with Amazon warehouse services, and obviously your Azure, Microsoft Azure, and Google Cloud. And then they also have databases in which they compete with MongoDB, Data Analytics, their competitors here, Teradata notably, and then their hardware and storage, where they do compete with, legacy providers such as IBM, HP, and Dell as a whole. So very well-rounded company is Oracle. As a whole, guys. Now, they have a huge backlog of orders, which we're going to tackle once we cover their earnings number, which is very, very good, guys. They have about $89 billion of orders in the backlog. And this is a company that makes pretty much, roughly around $55 billion a year. So that's kind of like 1.5 years worth of backlogs that they have still to go and get in sales. Very good. Quite decent net margins, have to admit, guys. Most recently, their net margins are about 20%. Very good for a software company. They do have decent free cash flow, roughly about $13 billion a year, which is fairly good. They also have decent stock-based compensation. It's really not that much here, guys, so that is another positive for the company. However, the one negative thing with Oracle is their debt, and we're going to take a look at that when we look at their financial statements. But take a look here, guys. Even though they generate a decent amount of free cash flow every single year, this year it's a bit higher, but usually between 9 to 13 billion. This year is going to be one of their better years. It's not here yet, 2023, but their debt, guys, 95 billion, a little bit too high in my opinion. It's the only red flag that we have for the company. So before we get into a few of the valuation metrics, let's go over their earnings and the highlights that happened. So Oracle shares soar 13% on better than expected quarterly earnings. Now, they did have very good guidance for the remainder of 2024, citing once again the heavy backlog of orders that they're still going through right now. So here we go. Oracle's cloud services and license support segment, its largest business, saw sales rise 12% to almost 10 billion, beating the estimate of 9.94 billion. Very good. The company attributed the rise to strong demand for its artificial intelligence servers. No surprise there. They said the company added large new cloud infrastructure contracts during the quarter. The company's cloud revenue, which is reported as part of the cloud services revenue, rose 25% year over year to 5.1 billion. So here is the kicker, guys. We signed several large deals this quarter, and we may have many more in the pipeline. What is one of those very large deals that they signed? They got McDonald's as one of their customers. Now, obviously, they've had very, very large customers in the past, right? You can see here Uber. And if I go down this list, you'll see a number of different banks and different very, very large companies from all around the world, like Toyota down here, right? In terms of all their business, you can just scroll through this endlessly, guys. They're partnered with some of the largest players in the game, but they've now secured one of the largest players in the game here, McDonald's, which is going to be migrating all of their online business applications to Oracle for cloud management and data analytics specifically. So very nice contract that they were able to obtain there. Now, we're building 20. Here's what Larry Ellison, the founder of the company, had to say. We're building 20 data centers from Microsoft and Azure. They just ordered 3 more data centers this week. That's absolutely amazing, right? Microsoft calling them, hey, can you just build us 3 more data centers, please? Really, really big contract there. The company's other units, however, didn't fare so well. Now, this is good because they're smaller business units, but it just goes to show that not all of the company's lines of businesses are growing at the same rate. Cloud license and on-premise sales declined 3% to 1.26 billion. Not that much, guys. They brought in 13 billion this quarter, so this is roughly only about 10% of their business, but still slightly beating the account's forecast. Hardware revenue fell 7% to 754 million. Also, not a large segment, but still notable that their hardware division fell, while sales in the company's services division slid 5% to 1.31 billion, both falling short of the expectation. So a few of their lines of business, although they are small, have been declining, but when you take it into consideration with their overall revenue, guys, it's really not that bad as a whole. Now, let's get into some of their recaps here from their direct financial statements. So you can see the Q3 total remaining performance obligations. How much money do they have in orders in the pipeline? Was up 29% to $80 billion. As I was saying, it's about 1.5 times yearly revenue. Very good pipeline for them. The free cash flow over the last 12 months is about $12.3 billion. Very good. It is one of their record years in terms of free cash flow so far. If we take a look here back, guys, going into the past 5 years, you can see they only beat it in 2020. But other than that, they have been under the $13 billion mark. So very good for them to have such a nice free cash flow amount. Could be considered to pay down a little bit of their debt with that. That would be a very good play. Now, here's what the CEO had to say about this. We expect to continue receiving large contracts reserving cloud infrastructure capacity because the demand of our Gen 2 AI infrastructure substantially exceeds the supply, despite the fact that we are opening new and expanding existing cloud data centers very, very rapidly. We expect that 43% of our $80 billion of remaining performance obligations will be recognized as revenue over the next 4 quarters. Very good. And so it just shows that although they have large orders, they're able to fulfill those orders relatively quickly here within the next year, and that our Gen 2 cloud infrastructure business will remain in a hyper growth phase, up 53% in Q3 for the foreseeable future. So Oracle, one of the big winners of the AI boom this far, and it just goes to show their guidance says that through 2024, that should indeed be continuing. Now, let's take a quick look, guys, at some of their financial statements down below. And I just want to show you some of the highlights here from your income statement, and then we'll go on to the balance sheet and address that debt. So here is some nice little statistics that we have for their revenue growth. So as you can see, guys, in terms of the revenue growth, total revenues up right over here, about 7% year over year, which is very, very fantastic. It's actually outpacing the growth of their expenses, which is exactly what we want to see, guys. We're looking for operating leverage. Can the company grow its total revenues faster than the expenses are growing? Yes, revenues growing 7%, operating expenses only growing 4%. Company is moving in the right direction at that point in time. Now, in terms of your net income, since they are growing revenues faster than they're growing their expenses, it gives better net income, more income to the bottom line. You can see here that net income for the past quarter was about 18%, not their highest quarter. Highest quarter would be about 22, 23%, but still in relation to the year ago quarter, it is a nice little boost to the upside. Now, I want to also take a look here down here, guys, at some of their financials in terms of their balance sheet. So I was saying how debt for the company could be a slight little bit of a problem. And this is the next statement that we're going to see, their balance sheet, right? So take a look at their cash and cash equivalents, roughly about $10 billion in available cash right now. However, their long-term debt outstanding, right? If you were to include, they have a lot of outstanding tax liabilities, guys. If you were to include most of these lined items, you can, in terms of the accounting, guys, you can do this several different ways, but let's just take their deferred tax liabilities from the prior years and also their long-term notes outstanding, puts their total debt outstanding at about $87 billion. And they only have about $10 billion in cash outstanding. So what I really want to see from this company, because they've been doing such a good job of benefiting from the AI boom, they have more revenues, their operating margins are up. I'd like to see them use some of that record free cash flow to pay down some of this debt, guys, because it's getting a little bit much in my humble opinion. So that's just it for that. And in terms of their stock-based compensation, guys, it's really not that bad here. So if we take a look at their stock-based compensation for the 9 months ended, is roughly about $2.9 billion, which in terms of their 9-month ended revenue is only about 7.6%. So not that bad. So the company is respecting a lot of our criteria here in terms of their success, right? They have decent revenue growth, decent EPS growth through 2027. I'll show you that right here. Very nice EPS expansion, never been a problem for them, and very nice revenue expansion as well, really benefiting from that AI curve ramp. Now, in terms of their price, now let's take a look at their valuation here, guys, right? So since they're trading roughly in the after hours right now, let's call it about $130, right? The company is up roughly 13, almost 14% in the after hours right here. If you take a look at this, their PE ratio for 2024 at $130 is about a 23.4. It's not that bad in terms of the company's historical PE ratio, always between 20 and 30% when the company is growing such as it is right now over the next 3 years. That gives them a PEG ratio at $130 of about a 1.67. Also not that bad here, guys. Their valuation, if we take into consideration, guys, now I didn't run some of your more traditional models, like let's say dividend discount model, discounted cash flow model, or potentially even the CAPM model on this. I really like to keep this as simple as possible so that you guys can understand. So if we were just to take this on a constant PE multiple basis, if we were to give them a valuation at $130, considering the fact that they may have a PE ratio between 25 and 30 over the next year, then it does mean that the stock at $130 is fully priced right now, okay? At $130, there may be a tiny little bit of upside all the way up to $150 if we were to stretch that PE ratio to 30. But just as I was saying, guys, the valuation stretch from 130 to 150 will not be coming because the company is undervalued. It's just going to come from multiple expansion. So just keep that in mind. Oracle, very nice play indeed, but I personally liked it a lot more down in the lower 100, 110 level. The valuation made a lot of sense for some upside to 130 to 150, but buying it at 130 to potentially squeeze out that little bit of 150 before they become overvalued, little bit too much in my opinion, guys. Personally, I would just rather go with a company like Amazon. Nothing to take away from Oracle. They're an outstanding business. Nothing bad to say there. But at $130, guys, you are getting into fully priced valuation. So just keep that in mind. Now, let's take a look at some of our subscriber requests here. So Naveed asking for POWL and Abercrombie & Fitch. So let's do Abercrombie & Fitch first because this is a very high flying retail stock. So this story I've talked about it rather, a number of times on the channel here, how pretty much since last May, right? May of 2023, this company is up substantially 440%, right? From $23 to $116, pretty much a 5x at this point. It used to be a 6x, but still very, very good. Now, we're not going to go over the fundamentals of this company. All that we can say about the fundamentals of this company is that they've been significantly improving here, guys. Take a look. They've never really had a problem with debt, but 2023 really allowed them to bring in a decent amount of free cash flow, get more cash and cash equivalents on the balance sheet, and now their debt only about $1 billion and cash sitting at $900 million. So they really don't have a problem with their balance sheet of how they're positioned like that. The problem with this company, guys, comes in the fact that most of the growth of the company is starting to get priced in. Take a look. This was your massive EPS expansion over 2023. 2024, 2025, and 2026, not that fantastic. 2024, good, but 25 and 26, slowing growth. And then also in revenue here, the revenue expansion on a year-over-year basis is not that fantastic. So EPS growth on average through 2026 is about 10% per year. Revenue growth through 2026 is going to be about 5% per year. Now, if we take their 2024 end PE ratio, their forward PE ratio, that is, at $116, which is currently the share price right now, it gives them about a 15.6. Not that bad in terms of the company's historical averages. It also gives them, when we put this in as an expression of their growth, the PEG ratio is about 1.56, which also appears not too bad. Now, if we take a constant PE multiple to this company, the company is currently trading right now at a 1920 trailing PE ratio. So in a year, when we once again have a trailing 12-month ratio, if we were to take a standardized 20 PE for the end of 2024, it gives them a valuation of about $150. So does this company have some room to move for it to just be in line with current expectations? Sure, absolutely. 150 is about that mark. And if we take a look, guys, at the analyst expectations, you can see that some analyst expectations put it about 136 to about 155. So my relatively easy and streamlined valuation model right here, which is just absolute basic valuation model, guys, right, is about $150. So can the stock have some room to move? Yes. Now let's take a look at the technicals, guys, because the technicals are fairly important as well. So we can see here that the stock has been moving casually in this beautiful daily uptrend here. Nothing as a surprise there, right? The problem arises that they lost the most recent low. So now the bears have engulfed the move. It opens the door for lower high into lower low. Now, that could just be some extended weekly consolidation and could put us back into this 12 EMA. You can see that ever since the company's rally, they have not lost the 12 EMA. So there could be a little bit of a swing trade available here, guys, from about the 109, 108 level when we touch this level to the downside potentially, all the way maybe up to that 150 range. However, just keep in mind the company can go beyond 150. 150 is just where it's fairly valued. So can this stock, for some reason, guys, go up to 160, 180, $200 in a very bullish momentum market? Absolutely it can. Personally, myself, right, I may be in for it for a little bit of a swing trade, but just keep in mind, guys, that we are kind of approaching terminal velocity on this one, right? Weekly RSI was heavily overbought. It's now down a little bit, but your monthly RSI is heavily overbought as well. So if this company, right, keep in mind, it doesn't necessarily have to bounce directly from 109 and then just resume the NVIDIA trend, right? It could very well have some extended weekly consolidation, which gives it monthly consolidation too, dip a little bit lower, and then later on in 2024, that's when they can resume the rise. So you want to be trying to get this one as low as possible. Personally, I would be watching out for this. If we get a daily downtrend, watch for how long the daily downtrend lasts. You know that the daily downtrend is done once the bulls reset with a higher low into potentially a daily uptrend. This breakout of the new daily uptrend is where I would be looking to personally make that swing trade to have a better pinpoint entry and not just trying to buy dips as they go down, not knowing when it's going to stop. I would wait for these longer term bulls here to step in potentially after some extended consolidation. So that's just a little bit of analysis here on Abercrombie and Fitch. Now, let's move into the second one, guys. The second one that Naveed asked us for is POWL. Now, thank you very much for this one. I really didn't know a lot about this company, but this is an ever so rare infrastructure play. You look at the way this stock has moved, and you would think that a lot of their business potentially came from NVIDIA, right? Because it only started pretty much when NVIDIA had their announcement of new data center services, right? And this is an electrical company that also manufactures electronic components and circuit boards and whatnot, right, for data centers. So I was assuming that potentially data center business for them became a larger and larger business, contributing more and more revenue. It's actually not, right? So we're going to look into that together, but very interesting infrastructure play that does have some potential upside appreciation to it. So POWL, let's take a look at exactly what they do. So you'll see right here from their earnings slides, their last earnings slides right here, that they pretty much do electrical distribution servers, right? So this is pretty much their components right there. They'll set this up for you if you have massive electrical requirements for the business that you run. They will set this up, and they're pretty much in a number of different markets. We're going to get, these are just a few of their massive installations, right, guys? So really big commercial applications as a whole. If we take a look at their primary markets, you can see that their primary markets, oil, gas, petrochemicals, few of their installations here. And then they have industrial and commercial applications. And I highlighted data centers here because I was potentially sure that most of their new business was coming from their data center division. However, it's actually not. If we take a look down here, guys, where they break down their revenue mix by sector as opposed to 2022. Okay, so keep in mind that this company, if we take a look at their financials, really exploded here in 2023 in terms of EPS and in terms of their revenue as well. You can see it was relatively flat and now boom, 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 23, 24, 25, netly up. So I was thinking that something happened in 2023 here with their data center business, but I stand corrected, guys. It's actually not at all. That would be part of their commercial and other industrial applications, this blue segment right here. And we can actually see that although it did grow, a little bit here in 2023, even in first quarter 2024, guys, it's not as if it 2-3x'd as opposed to the rest of their business. The rest of their business is still in oil and gas and petrochemical solutions, right? So very interesting that they were able to organically increase the revenue without much help from their data centers. So take a look at their revenue expansion here. Very decent gross margin expansion, very nice revenue expansion as well. And their operating cash flow has been significantly going up too. So everything working for the company. Now, what has been happening here, guys? Personally, if you ask me, it is the most likely the infrastructure spending, guys. And this is why I love this type of company, because it's playing on one of the underlying fundamental things happening in the US right now. The start of America's infrastructure decade, how macroeconomic factors may shape local strategy. So infrastructure, guys, think oil and gas installations, petrochemicals, highways, bridges, all that type of stuff, right? So construction and electrical engineering, like this company does, could be some very good plays here, guys. We have about a 1.2 trillion coming in infrastructure over the next 10 years. Between the Infrastructure Investment and Jobs Act and the Inflation Reduction Act, the Congress invested 1.25 trillion across transportation, energy, water resources, and broadband sectors for the next 5 to 10 years. And this is one of those companies that stands to benefit from that. Take a look at their backlog. Extremely interesting backlog, right? Almost 2x their backlog 2023 and 2024. This company makes about $1 billion in sales per year, and now they have well over $1 billion in the pipelines for their net new orders over the foreseeable future. That is extremely, extremely good for the company itself. And take a look here, guys, right? Gross profit, net improvements. Why? They've been increasing revenue a lot faster than their expenses and their operating expenses. So R&D and SG&A, which is selling, general, and administrative expenses, look at this streamlined cost control as their revenue really went up and their profits, as their revenue really went up, guys, right? Their profits also benefited from the fact that their SG&A and R&D did not go up that much. So let's take a look at some of this company's headlines here from their earnings. The backlog totaled $1.3 billion, which was very good. We already went over it. Here's the outlook, guys, from the CFO of the company. We are encouraged by the commercial activity across most of our core end markets and optimistic that this will continue throughout the remainder of 2024. Considering this, coupled with both the quality and size of our backlog, we are confident that we will sustain the solid financial results that we delivered in 2023 and anticipate this momentum will continue into 2024. So very good outlook on the most recent guidance. Now let's take a look at their expenses here, guys. Operating leverage, 100%, right? So look at these revenues. Revenues are up 53% on a year-over-year basis, measuring on a quarterly basis. Cost of goods sold only up 35.7. So they're growing revenue faster than cost of goods sold. They're also growing revenue faster than the increases to their overall operating expenses, so SG&A and their R&D expenses. Take a look at these guys. Even though they're up, they're not up significantly, which is exactly why the company now has significantly more net income here in this most recent quarter than before, right? Just growing revenues faster than every single one of their lined item expenses. And if we take a look at their balance sheet, guys, extremely healthy balance sheet. Cash and cash equivalents, $355 million. And their current liabilities, guys, they don't even have any long-term liabilities at all. Deferred and their long-term liabilities, guys, $13 million only. So great income statement, right? Revenues growing faster than expenses. Great balance sheet. They don't have any debt. The company is growing significantly here over the next couple of years due to that, the infrastructure industry growing as a whole. Very, very nice. In terms of valuation, guys, revenue growth through 2025, on average about 9% per year. EPS growth by the end of 2025, another 70%. It puts them at a 2024 PE at their current share price of about 19.76. In the company's history, that's actually not too bad here, guys, right? We can see in the past couple of years, it varies between 18 and 23 roughly. And the years where the company was really not growing, it was all the way as low, 12, 13, 14. But these are a couple of years where the company's growing, so they benefit from a higher multiple. Now, in terms of their PEG ratio at $152, the PE ratio as an expression of the growth rate, PEG ratio of only 0.28, guys. That is very, very good for this company. So this company, if we were to take this in terms of some analysis, right? In terms of some technical analysis, well, obviously, kind of the same thing as Abercrombie and Fitch, right? So we had a nice, beautiful daily uptrend. We just recently cut the lows right here. So it gives the chance for the bears to potentially set a daily downtrend. If a daily downtrend happens, it'll just be further weekly consolidation. And I'd be looking around here, around this 12 EMA, guys, 133. And if we can couple that one move to 133 with the reversal into a new daily uptrend after potential some reversal here for the next couple of weeks, that would be a very good entry for this stock, in my opinion, for further upside appreciation. Now, in terms of your analyst expectations, the analyst expectations here, they have price targets on the company. Well, there's only really one analyst covering the company so far, and he has a price target of about $128, guys. If I were to take this, I didn't put it on the screen here, but if I were to take this in terms of their financials and give them, let's say, give them potentially upside price target, guys, $200 doesn't really seem like that high for this company. So that would be a target that I'm personally looking for this company specifically. About $200 in terms of share price would put them at a forward PE ratio of about 25, which is not that bad. So that could be some upside targets, and it's right in line with your previous all-time high. So maybe a little bit of a swing trade here if we can touch this weekly 12 EMA, a little bit of a swing trade to the upside. A very nice company, very good growth prospects for the foreseeable future. So thank you very much much to Naveed for providing that ticker to us, guys. We'll be keeping this one on a potential watch list for a little bit of a swing trade. I do know that it is quite extended right now, so it will be a smaller swing trade, but still one that I am interested in playing because the company's fundamentals do support the trade. So that's pretty much everything we had, guys, for earnings and subscriber reports. Now, let's get right into some technical analysis from our major indices here, right? So, bit of a soft day today here, guys. We will be waiting for the expectations from the CPI. And CPI, guys, you know, depending on which way the actual report comes out, it could really send us in two completely different directions. Number one, if it does have a relatively bullish tone to it, well, we're going right back up to the top end of this trend line, guys. At that point, guys, keep an eye right here. 522 on your SPY is going to be the level to watch. The bulls still remain in full control right now. We still are maintaining higher lows compared to our previous lows, right? And we are still above our 12 EMA. So on a technical basis, there are no red flags. I keep bringing up the fact that we should be having, well, we should have had February seasonality, and we still have not had March seasonality either. So although we've been expecting drops, guys, the drops are just not coming, and the technicals also support the fact that the bulls are still in control. As I'll say once again, you only get nervous if you lose these lows right here. If we lose 505 over the course of tomorrow, daily uptrend will be lost at that point, and we will be looking, can the bears finally convert on a daily downtrend and flush this trend line? If they don't, well, your daily bulls simply remain in full control. So keep an eye on those two levels here, guys. Tomorrow, 504.80 is going to be the low pretty much of last Tuesday. It is your most recent higher low. Flush that, you lose the daily uptrend. That's step number one for the bears. But if the report comes in good and we just continue this daily move higher, well, you guys know the drill. Top end of the trend line as resistance. Now moving on to QQQ. Same concept for QQQ. I've included a little bit of a horizontal line in here. This horizontal line is best viewed on the weekly. Previous resistance on the weekly should be acting as current support. However, we are trading ever so slightly below it as of the close. In the after hours, we're back above it right now, but you can see the whole day was struggling to get above this level, right? So very important level for QQQ. The levels to watch out for tomorrow's CPI, 434. If we lose 434, the bears will confirm a daily downtrend. That will be the third daily downtrend by the bears in the past month. That's notable to us, guys. When we get so many confirmed daily downtrends at the top end of a move, it usually signifies that the bulls are getting tired, at least in QQQ, and could symbolize some potential for a reversal here. That being said, your bulls are still in full control. So if the report comes in bullish tomorrow, we will be looking for a retest of the trend line to the upside. For QQQ, that is roughly the $454 level. So that represents some decent little upside there. Bulls still remaining in full control. So just keep an eye, guys. These two levels are key for tomorrow. 434 for your downside flush daily downtrend. After that, we're looking for the trend line here to act as our last support. 432.61. Keep a close eye on those two levels. They will be actually absolutely pivotal. We're below the 12 EMA now, and I do think, guys, that if the bears do get the flush into tomorrow and potentially flush this trend line as well, you could end up lower high using this horizontal line, right, as resistance, lower high, maybe lower low. At that point, we will be due for weekly consolidation on QQQ. So just keep a very close eye. Tomorrow's report is huge. Now moving on to financials. Financials really acting as if nothing happened in the rest of the markets here today. Financials looking extremely healthy, guys. Daily uptrend simply continuing right now. We're on our next leg up at this point. Always defending this 12 EMA quite beautifully over the past 4 months of rally. So that is something to be said. Upside targets for resistance, guys, still maintained at our prior all-time high area right now. So roughly about, $41 to about $42, the area between these two yellow lines, right? $41, $42, next area of resistance. In terms of your daily bulls, full control right now. We are going to watch out for today's low. Pretty certain that today's low is going to be your higher low for future higher highs. If for whatever reason we continue consolidating tomorrow, however, and we lose this level right here, 40.20, that would be a loss of your daily uptrend. And then we'll be looking, can the bears convert a daily downtrend after not being able to convert a daily downtrend, guys, pretty much since once back here in January for a brief period of time, and after that, it's back all the way to November. So curious to see if that happens. If we do get an extended pullback here, guys, first line of defense is going to be this level right here, talking about roughly, $40. This yellow line right here should be acting as some fairly decent support. Previous resistance should be some support in the near-term future. And obviously the lower levels, guys, if we're dipping, I'm targeting this 12 EMA right here, 39.16. Financials looking very good. In terms of our healthcare segment, guys, healthcare is still flat roughly over the last 10 days of trading, right? So we're still looking who's in control right here. Well, the bulls are still in control. Why? Because we have full control of the weekly time frame. That being said, we've been consolidating at this point now for roughly the past 2.5 weeks of trading. So weekly bull flag, in my opinion, right? When you see such a nice move, consolidation at the high end of the move, usually a bull flag, especially when your longer term bulls, right, monthly bulls and your weekly bulls are in such high control right now, could be argued that we are going to get a future break to the upside. That being said, keep a close eye with tomorrow's CPI report, 144.55. Lose 144.55 to the downside. Unfortunately, you will be losing the daily uptrend as a whole. Gives the chance for the bears to set a daily downtrend. At that point, we will just be looking for further weekly consolidation, potentially being able to come down all the way to our previous all-time highs of 142. Healthcare looking very, very decent, guys. I'll be keeping a close eye, 147.29, just continue daily uptrend. And to the downside, guys, keep an eye, 144.55. Lose that potential for a daily downtrend, and 142 is going to be my target for weekly retest of your previous all-time highs. Now let's move into IWM Russell. IWM Russell performing fairly decently on the day. It was down 0.79%, but I say decently. Why? Because we're still above the 12 EMA, haven't flushed our previous lows. We're still a fair way away from our previous 1.5 year area of resistance. This red box right here, talking about 201 down to about 195. So as long as we can maintain above this level, guys, the bulls are healthy. Now, we are still in a nice daily uptrend. Keep an eye on this level for tomorrow. So the low pretty much of last Tuesday's trading, talking about 203. Crucial level, guys. If we lose that into tomorrow, well, unfortunately, you lose the daily uptrend. Give the bears a shot for lower high, lower low. Could be daily downtrend. At that point, guys, will just be weekly healthy consolidation on the Russell. Anything at this point, anything above 190.35 is just going to be for a weekly higher low. And this previous area of resistance will now be acting as big support. It's the one I'm looking for here, guys, to make this trade myself on the Russell. I'm going to be using TNA, which is the 3 times leveraged version of the Russell. But even the Russell would just be a fine area to be pretty much taking the breakout, retest of this big area of support, and then run into later 2024. So this buy zone right here, 200 and below, is what I'm personally targeting. So far, so good. Keep an eye on this low for tomorrow. Now moving on to the Dow Jones. Dow Jones recovering nicely here today, helped largely by Apple, which is one of their biggest contributors in the Dow Jones index here. Dow Jones still trading below our support line. Look how big this previous resistance was support, now resistance. It's a pretty big level, right? This 38,800-ish, still trading below it, but at least the bears not able to get below this most recent low here. Last Tuesday's trading, once again, a lot of the lows of all of our indexes is last Tuesday's trading, right? So we'll be keeping an eye, guys. If we get the lower low flush compared to last Tuesday's trading, it'll just be daily downtrend continuation and will just be further weekly consolidation. Now, the Dow Jones has been consolidating for a better part of the last 3 weeks at this point, but once again, this is a weekly bull flag. Whenever you see such a nice move up and then the bears barely able to take back anything. And keep in mind, right? The bears had a decent opportunity because Apple is such a major contributor to this index. For the fact that the bears were only able to take this one down 1.5% when Apple over these past 3 weeks, right, have been down, Apple as a whole has been down over 6 as of last week's, almost 8%. Very impressive for the Dow Jones to be able to really maintain relative levels in that aspect. The weekly bulls are still in full control. So even if we do get extended pullback here, guys, I'm targeting this 12 EMA to the downside, 38,200. Any dip lower, guys, is just for weekly higher lows compared to this low right here, 37,150, for further trend expansion later on in 2024. So the Dow Jones looking good in terms of your weekly timeframes, but still the bears do control your shorter timeframes. So keep a close eye on this level tomorrow. If we do flush, just maintains the daily downtrend. Weekly consolidation just continues. But all in all, very healthy. Now let's move into yields ever so slightly. So yields just doing absolutely nothing here, guys. Over the most recent couple of days, we've always been looking for this monthly lower high into monthly lower low because rates are coming down later on in the year. That being said, how do we know that this is probably the monthly lower high? Well, we were looking, when does the weekly trend start to roll over? And we got this indication that it was rolling over here. Why? Because we lost the daily uptrend at this point. So inter-time frame analysis, very important. Look, when the bears regained this daily downtrend right here, right? just full weekly momentum to the downside at this point. Your longer term bears, I would argue, are now in control. The bears took back so much of this move initially. Lower high, lower low is going to be the scenario rather, that I'm looking for to perpetuate here on the 20-year, but also on the 10-year as well. So just going to be looking for further continuation to the downside by the bears here. Daily downtrend looking extremely healthy right now. Just looking for a lower high. And look, now we have all the moving averages above us, right? The 200-day in green and your short-term moving averages could be acting as resistance and further downside flush. Tomorrow, one thing's for sure, guys, if inflation comes in lower tomorrow, this thing is going to drop like a rock. And if inflation comes in slightly on par or slightly higher, these things are not going to go like this. They may only just go light little retest like this, maybe for the next couple of weeks, and then just resume the trend to the downside because your longer form bears are currently starting to regain control of the longer time frames. Now let's move into crypto, guys, because crypto just not stopping at this point, right? So Bitcoin, very healthy daily uptrend still at this point, guys. Nothing bad to say, right? Extremely healthy daily uptrend right now. I'm not going to include the all-time high sell-off candle because it lasted for such a short period of time. So this right here is the daily uptrend. Any pullback at this point, just going to be looking for a higher low, anything above 60,500. Higher low for further trend continuation. Bulls in absolute full control. Look at this weekly uptrend, right? How nasty is that on the monthly? Full breakout mode at this point as well. And your monthly volume, guys, just take a look how low the volume is compared to previous all-time high breakout cycles. 2017, 2021, you see the volumes, how high they were, roughly double of what they are right now. Bitcoin off of low volume, moving past the all-time highs, and only now, as I've been telling you guys, in CNBC over the last 2 weeks, only the last 2 weeks have they been talking about Bitcoin on a daily basis. Before that, it was like once a week, maybe once in 2 weeks, they would bring on a Bitcoin, some Bitcoin proponent or a crypto analyst and give their speech on Bitcoin, but not much attention was being paid to it. Now, starting to get a little bit more prevalent in the mainstream media, but still, the volumes are low, retail has not caught on, guys, and the institutions are still not fully positioned. So my target for the end of 2025, not 2024, but 2025, end of year target for me, still 125,000 plus on Bitcoin, looking excessively bullish. And on Ethereum is looking as very, very good as well. Oh, sorry, on Bitcoin, guys, if you're looking for a little bit of a dip buying opportunity, guys, I would be just targeting here the weekly higher lows. If we ever do stop this daily uptrend in its tracks, daily downtrend, and then weekly consolidation, well, at that point, guys, previous all-time highs, right? 59, roughly up to about the 65. This whole midpoint area could be a beautiful area of retest before further runs. So that's where I'm going to be looking at for some dips myself. And Ethereum just now cracking the $4,000 mark. Excessively bullish move by Ethereum as well. Look at this gorgeous daily uptrend, right? Such a beautiful daily uptrend as a whole. So at this point, daily higher low is set with the low of yesterday's candle. Any pullback looking for a daily higher low above 37.43. Beautiful daily uptrend right now. Future areas of resistance, obviously your weekly bulls are in absolute full control of this weekly uptrend. We don't really talk about RSI levels on crypto because it's crypto. They don't really matter, guys. I mean, it's an over-exaggeration, but at the same time, it's really not. Sometimes they just don't matter for weeks and weeks and weeks on end. That being said, further upside target resistance, we're almost there, 41.31, and then it's the all-time highs, 4,900 recently. If you're looking for a little bit of a retest trade, I would be targeting this previous area of supply. So roughly 35 to roughly 3,300 could be a great area, weekly higher low for further trend continuation. So that is where I would be playing some buy-ins for Ethereum myself. Just very tough to buy the top end of a rise, right? Now let's move into our big tech stocks, then we'll do my portfolio real quick. So moving into Apple, guys, Apple healthy little day, 1.18%. Apple still in a daily downtrend. So I will remind you, when we're in a daily downtrend and you're looking for the bulls to reverse this, we have to measure the size of the bounce in relation to the most recent down leg. So the size of this bounce, the bounce has been undergoing nicely. You can see here the bulls have recently recaptured your hourly uptrend. So the whole time that this stock remains in an hourly uptrend, the daily bounce continues. So how high have the bulls gotten on this bounce so far? We can put the fib on that and you see that they only bounced roughly 38% of the move. If you want to see the bulls having the best chance at regaining your daily uptrend, I need to see a bounce at least 176, but at best higher than 178. If we can get up to 178, guys, the bulls set themselves up very nicely to be able to create enough space to set the daily higher low and resume into a daily uptrend. As of now, the bears have been in full control of this daily downtrend chart right now for a better part of the entire trading year, right? Ever since the late January 2023 has been a daily downtrend. So we're going to be keeping a close eye on the size of that bounce. That being said, we still have previous support levels down here, right? 166, 165 is the lower end of your range. I'm still confident that Apple will be able to maintain this range. It's your previous all-time high acting as resistance, previous fall sell-off area of support, and now acting as support again. If for every which reason, guys, we lose 165, I do think it might just be a temporary stop hunt. But if we lose it in a significant fashion and just continue trending to the downside, well, then your downside targets are set at about 155, 150. Your 200-week moving average is also down there as well. That would be a heck of a buying opportunity if that happens, guys. I don't think it's going to happen, but obviously I really don't think it's going to happen. If I had to put probabilities on this, coming down to 150 is probably maybe a 10% probability in my mind at this point, maybe at best 15. But if we do come down there, one thing's for sure, guys, the call options are going to be played, that's for sure. But all in all, guys, Apple looking fairly decent. We're just going to keep a close eye on the size of this bounce right now. Not high enough. If the bulls were to retrace immediately as of tomorrow's trading, well, probabilities do favor the bears for lower flush, and that would be an area of about 165. Now moving on to AMD. AMD also down on the day, 4.34%. A lot of your semiconductors, guys, were netly down on the day. AMD pretty much leading the pack to the downside, but that's okay. AMD still has tons of space. So they did lose the daily uptrend with today's trading. That was a break of 199 roughly. We did break that today. So it sets the bears up for once this daily downturn, caps out to the bottom here, we could be expecting lower high into lower low. Why is it not a problem, guys? They have so much space on the weekly. Anything above 163 roughly, just going to be looking for a weekly higher low for further trend continuation. Keep an eye on this level right here, guys. 181, 182, it's the top end of this range. So that, in my opinion, this line right here, let's call it about 182. That is where your weekly bulls will be able to put up more of a fight here, weekly higher low for further trend continuation. So I'm looking forward, if AMD can come back down here, guys, 182, it may free up some swing trades down here into the mid 170 levels. I think it's going to be very tough for the bears to blast through this whole 1 month worth of range as if it wasn't even there. So if we do pull down into this range, guys, lower 180s, I may be making some swing trades in the 170s. All in all though, no red flags, just temporary consolidation on AMD. Now moving on to Amazon. Amazon 2% to the downside here. So Amazon pulling back nicely, daily downtrend here. So Amazon has not set a daily downtrend in quite some time, as a matter of fact, since the month of December pretty much. So it has to be notable to us. Loss of the daily uptrend into daily downtrend and loss of the 12 EMA at the same time. So now that we're in daily downtrend consolidation here, guys, one of the levels to look out for is going to be this 166 level, and the next area will be the post-earnings gap fill area at about 159.50. Now that the daily downtrend is in motion, it means weekly consolidation here, guys. And weekly higher lows, that 165 level I was previously referencing, very important level. It is your last weekly higher lows right here. So need the bulls to protect this. If ever they don't and roll over this ever so slightly, well, you have your 12 EMA, 166 as well. But if ever we roll over a bit more than that and lose the weekly uptrend, guys, wouldn't be weekly downtrend. Weekly downtrend would be this. Just the loss of the weekly uptrend means that you just lose the most recent higher lows, right? So even if we push back a little bit further than that in terms of weekly consolidation, maybe we go to 160 to get that earnings gap fill, right? Well, guys, on the long-term timeframes, that's literally just a monthly higher low for further trend continuation. And I do believe that Amazon is going to outperform many things in 2024. That being said, overhead resistance still put 178, tough for the stock to move above that, and then the all-time highs 187. So I'm looking forward to Amazon on this consolidation, guys. If we pull down into the mid 160s, definitely playing some short puts there. Now let's move on to Google. It's going to become a bit of a meme on the channel, the fact that I always drink my coffee around Google, right? So in terms of Google, guys, 2% to the upside, very nice recovery. One of the only big tech stocks in the green with Apple pretty much, unless you really count PayPal, but Tesla, Google, and Apple really pulling their weight today. So up about 2%. And here is why the size of the bounce matters. So Google has been in a daily downtrend for pretty much, ever since the end of January, similar to Apple in that respect. Now, this most recent down leg right here, we were looking for the size of the bounce, and here's why the size of the bounce matters so much. Look at this engulfing bounce coming exactly where we wanted it to here, guys. The size of this bounce now, almost 100% bounce. It sets them up perfectly. Whenever we get a reversal now, at this point, the bulls have a chance to set a higher low and recapture a daily uptrend that they have not had since the end of January. Very important move. That being said, right now, these two yellow lines is where we're getting rejected. It's normal. Big previous resistance. It was support, but now that we're below it, it acts as resistance once more. So we were expecting, if we did move into this area, to potentially get rejected by it. That being said, tons of space now to set the daily higher low. Anything above 131.50, looking for the daily higher low for potential trend reversal to the bulls at this point. Weekly also not looking too bad, if I do say so myself, guys. We are in a bit of a weekly downtrend similar to Apple, but that's not a problem. That's not a problem, guys. It has just been healthy monthly consolidation for the past 2 months. You can see we're rejecting right now on the monthly 12 EMA, which was that 131 level. And that's exactly what we were looking out for, guys, when I pulled up the long-term analysis on Google. Rejection from the 131, most likely moving towards new all-time highs later on in this year. That would be a break of the 154. For now, Google, if Google pulls back here upon setting the higher low, I'm going to be looking, guys, to play Google aggressively, may even throw some leap calls at it. Now, moving on to Meta. Meta down about 4.5% on the day. Well, guys, Trump had an interview and Donald Trump was asked questions about TikTok. And while answering questions about TikTok, Facebook actually did come up as well. And he had his fair share of comments for Facebook, calling them deeply un-American in terms of as a company. And he referenced a lot of the practices that the company had been doing in 2020 and 2021 in terms of censoring certain demographics of the population, in terms of certain opinions that weren't very popular at the time. Facebook, Twitter, and a lot of social media entities were censoring those keywords and key opinions. So he had some statements on that. And apparently was enough to cause Facebook to drop, almost 5.5% on the day. There was no other news for Meta on the day, guys. So really has to be that, because it started dropping as soon as Trump had that interview early on in the morning. So that being said, Meta right now currently has lost the daily uptrend. They lost the daily higher low right here, 488. Now the bears are set up for a potential lower high into lower low. Can the bulls potentially V-shape this if CPI is good? Of course they can. But let's say for all intents and purposes, we get a lower high into lower low. That's just fine. Healthy weekly consolidation for Meta. Anything above 455, just a healthy weekly higher low for further trend continuation. Now, if Meta does come close as possible to 450, I may be tempted to make some plays 440, 430 in terms of some short puts. That's where I prefer the company. But you can see just this 1 day of sell-off right here and the start to the week. It has been considerably bringing down this RSI. If we can have a little bit more of this, guys, maybe over the next week and a half, I do think that the RSI is going to come down to more manageable levels for Meta. It's going to represent a very good buying opportunity. If we can get down to 445, this weekly 12 EMA, look how long Meta has held up the weekly 12 EMA, guys. So if we do come down here, guys, no brainer trade, in my opinion, for the foreseeable future. So Meta looking good despite today's sell-off. Now moving on to Microsoft. Microsoft consolidating sideways ever so slightly, right? So Microsoft has been one that's been plagued with a few daily downtrends as of recently. As a matter of fact, if we break last Tuesday's low right here, 398.25, it will be continued daily downtrend and will be continued weekly pullback as well. Now, the bulls still have some saving grace if the CPI report comes in bullish tomorrow. If that does happen and we break Friday's close, well, we end up in a daily uptrend. But nonetheless, guys, we've really been stuck, other than 2 days right here. As a whole, we've really been stuck between 416 roughly and to the downside around $398. The same thing happened to Microsoft back here. At this point, just a bit of a wider range of consolidation, but CPI is going to do one of two things. We're either going to get back into a daily uptrend, at which point we have to crack 416. If we crack 416, you end up back in just weekly uptrending mode. And if we break to the downside here, guys, well, it'll be downtrend confirmed, weekly downtrend confirmed, and just a bit of further monthly consolidation for Microsoft. If we do get that breakdown here, guys, I will be looking to play Microsoft. 380 zone is a perfect area, in my opinion, to be playing Microsoft. So that being said, looking good all up to tomorrow's CPI report to determine whether or not we just continue the flush and can get some better opportunities down here, or if the stock just going to continue to grind higher. At that point, watch out for your 418. Break of 418, guys, would be significant. We would be back in our weekly uptrend mode. Moving on to Netflix. Netflix not looking too bad here today, 0.64% to the downside, really just consolidating sideways here. Keep an eye, guys, last Tuesday's trading low, once again, 592.55 to the downside. Lose that, daily downtrend is confirmed. Weekly consolidation is still underway. And at that point, guys, I do think weekly consolidation could take us in to about 575. This big previous area of resistance, well, it should now be acting as some decent support for the bulls. So if that ever does manifest into tomorrow's trading, just keep an eye, guys. 575 is going to be a juicy opportunity for the infamous breakout, retest of the range, and continue to run into 2024. Upside resistance targets at this point, guys, well, the one we were struggling to break, about $620, and beyond that, your all-time highs up at about $690. Moving on to NVIDIA now. So NVIDIA, another day of consolidation, healthy consolidation nonetheless. Look, 2 days of trading, right? Erases so much of these overbought conditions, now no longer overbought. Very, very good. Still in a very healthy daily uptrend right now. Anything above 772 just for a daily higher low for further trend continuation. And we are still playing defense around the 12 EMA here. The red flag comes if we lose this 12 EMA in one single shot and the bears take back too much of this move. It opens the door, lower high, lower low. That opens the door for further weekly trend consolidation. And at that point, guys, I'd be targeting pretty much this area right here, 720. It is your weekly 12 EMA. And NVIDIA really hasn't lost the weekly 12 EMA other than this sideways consolidation, right? When it is trending nice to the upside, it usually does not lose the 12 EMA. So 720, a possible area of support if we do pull down that much. That being said, your daily bulls still remain in full control. They only start losing control here, guys, if they start pulling back further than this. We're really at the breaking point for NVIDIA right now. You can see the bears have pulled back 61% of the move. This is where the bulls need to put a stop if they want to have a shot at really breaking this back to the upside V-shaped style. If not, if they take back more and more, guys, could set up lower high for a lower low, or at the best case scenario, if that happens for the bulls, maybe just a tightening range accumulation. Now moving on to Tesla. Tesla not looking too bad, 1.39% on the day, right? But still Tesla on the longer term timeframes, guys, bears are in full control right now. Keep an eye, guys. We are currently still in a weekly downtrend, targeting the lower levels at this point, 180 down to 170. We're currently trapped in this area of resistance right now, $177 range. If I'm playing Tesla, guys, it has to be, 165 range to 150. I want to be playing the lower end of this range as possible because it's such a cyclical business. We know that their demand is not really going to come back much before the next 6 to 9 months, right? So there's really no rush for this trade in my personal opinion, unless the market decides that Tesla has been so oversold recently. I mean, take a look at the year-to-date performance by Tesla, guys. It's really not that good, is it? 30% to the downside almost, where the rest of the market is entirely green. Tesla's been one of your worst performers, actually probably the worst performer of the entire S&P 500 on a year-to-date basis, save for maybe a few smaller name companies that are not on this chart right now. That being said, daily downtrend is also prevalent in the stock. We're just looking for lower high, potential lower low continuation. And you can see here, guys, struggling to reset the hourly trend. Can't even get, look, we had a beautiful blast up off in the morning, expecting lower high, higher low into maybe higher high continuation. No, look, they lost it already. Loss of the hourly trend again. So may just be due for another leg down on Tesla. At that point, I'm expecting, mid 160s to the 150 range to be the next target area for Tesla. So bears, unfortunately, still remain in full control. If you want to see the bulls in full control, guys, need to get the hourly trend back over the course of this week, and then we measure the size of the bounce in relation to 205. Get me as close as possible to 205, then we can talk about the bulls' chance at resetting the daily uptrend. Now moving on to Palantir and PayPal, our two last ones. So Palantir, not looking too bad, down about 2.65%. The reason I say not looking too bad, we're still above our 12 EMA, and we still have a decent amount of space here before our most recent higher low. So anything above 23.42, still just looking for a daily higher low for further trend continuation. We're now approaching the zone of support, right? So this whole previous resistance, call it about 25, 26, $25 is going to be a decent area of support. The 12 EMA is right here as well. So we'll see, can the bulls put a stop to the bleeding, daily higher low, before potentially moving on and attacking this area of resistance, $28. Again, Or if we potentially take back too much of the move, lower high into lower low, well, that very simply, guys, would not be that bad either. Why? Because the weekly bulls are in absolute full control. Just looking for a weekly higher low, anything above 22.25-ish. Just looking for a weekly higher low for further trend continuation. Personally, myself, I'm looking for as much consolidation as Palantir can give me. I want to be playing this stock, guys. $23, $22, $21 is my preference. Now moving on to PayPal. PayPal, nice little day, almost 2% to the upside. And now PayPal, guys, is PayPal going to make another run at this weekly downtrending channel line? That is what we'll be looking out for, guys. It's getting very close, right? The downtrending, as long as we stay sideways, guys, sideways and above 60 to 57 is best case scenario. We were talking about last week, even though the bears pulled back a lot, we are still technically in a daily uptrend, right? Higher lows and higher highs. So with that in mind, guys, daily uptrend potentially still being in control by the bulls right now. We're going to be looking for a break 61.87. 61.87 break, daily uptrend simply just in full control of the bulls right now. And then we may get our trend line break. If that trend line breaks to the upside, guys, it's looking extremely, extremely, extremely attractive on the weekly. Right? That would just be potential continuation of a little bit of a weekly uptrend right here. I know it's ugly, but it would still qualify as a weekly uptrend. No weekly closes below 57, which was what we were worried about. And if we get a potential weekly close here above 60, I do believe it will be a technical breakout. At that point, guys, I'll be targeting pretty much $75 to the upside of PayPal. We've been waiting for this one for a while, so it may just be right around the corner, keeping a very close eye on it. So all that being said, guys, that's pretty much everything we had for the analysis. Now let's take a very brief look into my portfolio for the trades of the week. All right, guys, so taking a look at my portfolio here, you can see that year-to-date performance inclusive of today, we're up about 11% year-to-date. Very nice recovery. Had a bit of a rough start to the year. We got assigned a few plays back in December that were either China-sensitive plays or interest rate-sensitive plays, and it took them a fair bit amount of time before turning around, before we were able to write covered calls on the positions and exit those positions with a profit. Since being exited those positions and having full buying power on the account, you can see here that we've roughly started to outperform the indexes, and I believe that this outperformance, guys, this strategy tends to outperform the indexes on regular years, and I don't believe that this year is going to be any different. We should continue to outperform the indexes. We're up about 11%. If you take a look at SPY, after today's sell-off, they're only up about 8.3%. You can see down here in the lower right-hand corner, 8.3% on SPY, and QQQ for the year is only up about 7.7%. So we're really starting to get some distance between us and those indexes. Now moving on to our positions, guys, not going to go over these fairly quickly because not much has changed. We still have the Rivian covered calls, 12.5s. If we get called away on those week, we'll make roughly, 70 cents per share on Rivian. We have about 300 shares, so that'll be a nice little $210 if it maintains above $12.50 by the weekend. If it somehow dips below, we'll just continue to farm premium on the Rivian position. Now, we did take a few earnings plays, guys. In terms of number one is going to be Kohl's. So this is the KSS. You can see I have two strikes here, one for about $22. We got about 14 cents for those. So, above our 0.5% rule, which would have been 11%. Still didn't get the high of the day, however. And then we have the 22.5s, which we got about 18 cents for. Closer to 1% rule for this. Still didn't hit the high of the day, unfortunately, guys. I wrote them at 3. If I would have waited till 3:55, I could have got that extra little juice right there. But still, Kohl's, just to show you guys, Kohl's very conservative earnings play here, guys. I'm at the 22s and 22.50s. Now, the expected move for the stock right here, if I can pull it up again, KSS, let's just put it right here, right? So the expected move on this stock is down to about 24.20. Expected move of about 11%, right? My strikes on Kohl's are all the way down here, 22. So in terms of percentage, guys, I went pretty much 2 standard deviations, twice the expected move. The 22s would be about 19% to the downside, and 22.50 is about 17%. So on one of them, not quite twice the expected move, but on the second one, very close. And 22, guys, 22 has been a decent area of support for this stock. I know it dipped under it a few times in the past, down to about $19, but still the $22 strike has been playing out fairly good. So if ever they report bad earnings, I'm expecting that to pretty much hold. We'll see what happens. They report first thing before the open tomorrow. We also have another play that we took, Oracle. Oracle, guys, as I've been saying, I've been playing this one a bunch of times when it used to hit the lower $100 range. Every time it was down here, I love to play it. And today was no different, guys. The stock before the earnings was trading about $114. The expected move on Oracle, I just had it up previously here, but you can see the expected move on Oracle was about 7.9%. Let's call it about 8%, down to about 105. So 105 is in my sweet spot for Oracle. I chose to go, however, with the lower end of our support range right here, which is about 102 down to about $100. Beautiful area of monthly consolidation above our previous all-time highs, lower end of this range right here. Support was just fantastic on this one. So that's why we went with the 102s and the 109s. So still significantly below our expected move of 105 and exactly at our support. And I know it's a very solid company exposed to AI and exposed to data centers. So I was pretty sure at least they would come in on par for earnings. And I would be highly surprised, guys, if they were to report any negative earnings. That being said, last time they did go down about 12%, and that's exactly how much I forecasted in to my current strikes right now. You can see that the 102s would have put me roughly 10.5, and the 99s roughly about 13%. So I really tried to make the best of that. You can see for the 102s, we got about 89 cents, and the 99s, we got about 51 cents. So these will be pretty much be worthless tomorrow, as Oracle's trading about 133 right now, 130, right? Very, very decent trades right there. We also have the Apple 170. So I know in my video, guys, I was saying that the Apple trades should be below the $167 mark. But you guys know me, on the top 5 videos, I usually give more conservative targets because I'm not too sure how familiar with how everybody is with the put wheel strategy, right? But you guys know me, for a past month now, I've been saying as long as Apple is between 180 and 165, I will be playing this as an aggressive bull. So which means I got a bit more aggressive here today, not waiting for CPI. I went with the 170s. Now, if CPI is negative tomorrow and we dip down here back to 170, I'll do another Apple contract, 167.5, 165. I don't care, guys. Give me as many Apple shares as you want down here in this green box, and I will gladly take them. Not nervous about this position at all. Obviously, that's an over-exaggeration, but I really wouldn't mind, guys, coming out of this Apple drawdown, 200-300 shares with a cost basis in the low 170s, high 160s. That would be absolutely fantastic for me. So that's why I took a little bit of more aggressive play above the expected move for Apple for the week. 170s, got about 88 cents for them. We'll see how those play out on the week. Now, we wrote the Shopify 71s. Those were featured in my video. Nothing changed there. So we were really looking for this area of previous resistance to now be acting as support. Shopify 71s, same trade as I took last week. Really like the way this company has turned around. They're now finally profitable, have divested from the unprofitable portions of their business and putting out decent margins and decent growth for the future. So I'm giving them a chance. Wrote these 71 puts, and you can see, guys, we got about 35 cents. Pretty much our 0.5% rule. Quite happy about that one. And lastly, we wrote some Tesla 167.5s. So we wrote these when Tesla was roughly in the same price as it is right now where it closed. So we got about 80 cents for these. Not quite 0.5%. True 0.5% would be closer to 85 cents. But I did like this strike, guys. It is a significant amount off the current share price. So we'll see what happens with that. And it is in my lower area. The expected move for Tesla on the week is 167.35. So we are really close to that expected move, guys. It is still in our big horizontal support range. It's the downside, the down part of this downtrending channel line as well. So looking for at least a bit of support down there, should be able to probably close this one worthless. And if ever we get a sign, guys, it's very, very easy for me to be writing covered calls on Tesla. The rest is pretty much still the same. Still have our TMF position here, 20-year bonds. Here are the calls. We still have a few swing trades active, quite a few swing trades active actually. Melly, SPGI, MCO, performing decently. The trade on Zscaler that I took last week, performing nicely now. New swing trade for the day, TJX. You'll see that all of my swing trades, guys, are the exact same trades. They're all in long-term uptrends. And what we're looking for is 6, 7, 8 days of selling in a row, 4-hour oversold conditions. And we're looking for the initial time that the bulls are trying to change the hourly trend to get a daily bounce going. Do we know if they're going to recapture the daily uptrend or not? We don't care. We're just looking to play the bounce, 6, 7 days of selling in a row, right? 4-hour oversold conditions, exactly what I'm looking to play. The same thing with the trade I took last week on Zscaler. Same single trade, right? Daily, 5, 6, 7 days in a row red, 4-hour oversold conditions, bottoming out process, and we're looking for the bulls to put in that new hourly trend shift to the upside, giving ourselves a daily bounce, and we're just trying to play the bounce, guys. A lot of these swing trades, we should only be in them for about a week and a half at the most. We're looking to make anywhere between 2, 3, 4% on each one of these trades, still respecting my 0.5% to 1% rule on any single trade you make, guys. If you're always making, 0.5%, 1% per week on any trade you make, and your entire portfolio is always being rotated, guys, you should outperform the market really every single year. We're not looking for home runs, guys. If you're familiar to the channel now, you guys know that I don't usually play for the home runs, right? That's why I have a long-term share portfolio that I never sell and a long-term crypto portfolio as well that I very rarely sell. Those are where the home runs come from. And now, guys, that we're in a year where the bull market is truly underway and we're going to have the support from the Federal Reserve with them bringing down interest rates, I'm looking for more and more leap call options. I've been waiting for this March dip, February dip too. It just hasn't happened. And I've told a few people on the channel, if we get the February and March dip, I'm going shopping for leap calls. That has not changed. If we get some more extended sell-offs during the month of March, potentially, I'm going shopping for leaps, and then you'll see a few home run, quote unquote, plays, right? Going for leap calls, Apple, Google, anything that drops significantly, guys, I'm going to be looking to heavily play it. Maybe even some smaller names like Square and stuff like that if the values are good. So with all that being said, guys, few little swing trades still open. The rest, guys, Nike, not high enough for covered calls. Baba, not high enough for covered calls, not low enough for puts either. So that one's a pause. And the rest fairly the same as well. So hopefully you guys enjoyed today's video. That was pretty much everything. If you did, consider dropping a like, would really appreciate it. And consider subscribing to the channel if you're new. Thank you so much, guys. We're getting close now to the 900 subscriber mark and soon 1,000. I can't wait. And as usual, guys, if you have any questions whatsoever, or you want me to look into some specific stocks, I usually have time to do maybe 1-2 tickers per day in terms of subscriber requests here, guys. So let's keep those going as well. If you have any questions as well, just feel free to leave them down below in the comments, guys. I'll get back to you within the first 24 hours usually. So take care. See you tomorrow after the close. Big day, CPI. Peace.